Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Monday, August 3rd, 2009. Currency markets extended the rally and higher yielders seen at the end of last week as stocks rose around the world today and several countries showed the pace of contraction in their manufacturing sectors easing. That helped boost risk appetite and pushed several pairs above important levels. The euro-dollar, for example, following a slide to the 1.42 level at the start of today's session, then rallied 200 pips, moving above 1.4440, which is a fresh high for this year. The pair also broke above a trend line which was acting as resistance. The pound-dollar pair extended its break of resistance from Friday past the 1.66 level, climbing today all the way to 1.6980, a new 9-month high for the pair. Today's rally amounted to about 260 pips as UK manufacturing data was positive, along with a strong jump in London stocks powered by banks HSBC and Barclays. In fact, the FTSE 100 reached October's levels, which is the last time the pound reached these levels against the dollar. The pound yen jumped more than 300 pips in today's trading, climbing to its highest level since June 15th. The psychological level of 160, which was the high from late in July, was broken in New York trading with a rally in US stocks that also reached 9-month highs, further boosting risk appetite. In the UK, the manufacturing sector expanded in July according to its manufacturing PMI, which rose above the 50 level, separating expansion from contraction for the first time in more than a year. The PMI index climbed to 50.8 from 47.4, which is the best reading since March of 2008. The report showed that new orders rose the most since November 2007, as companies have begun restocking their inventories that they ran down during the recession. In the US, the ISM Manufacturing Index rose to 48.9 in July from 44.8 in June. That result was better than expected and is an 11-month high. Factory output around the world has been helped by strong public spending, and firms are starting to place orders to replace their rundown inventory. The new orders and production sub-indexes in the report both showed expansion. The manufacturing production news from the US came after China also posted its PMI index, which showed a 12-month high. The sense that the major economies are starting to see production come back helped send oil prices higher, with the price for a barrel of oil climbing above the $72 level. The US dollar-Canadian dollar pair slid in favor of the loonie as a result, breaking below support at 1.0750, which was established last week. Today's slide amounted to about 130 pips, and the greenback found support at the 1.0640 area. The Aussie also benefited from commodities and stocks rallying by extending its move above last week's resistance turned support level around 0.8350. That returned the pair to its levels prior to October, when the collapse of Lehman Brothers sent traders to the safety of the US dollar. Tonight, Australia will release reports on retail sales and housing prices, followed by the Reserve Bank of Australia interest rate decision. Overnight, the UK will post data on housing prices and its construction PMI, while the Eurozone will release its producer prices for June. Tomorrow, the US will release data on personal spending and incomes, along with a report on pending home sales. And that concludes our broadcast. Thank you for joining us here at CMSFX.com, and happy trading.